Here's the deal. You work hard, you're on your feet, hustling table, driving people around 2 a.m., cutting hair, mixing drinks. So tips are how you actually make money. And every year when tax season hits, the government usually swoop in and take a cut. But it's not anymore. Starting in 2025, there's a brand new rule. You can keep up to $25,000 in tip money completely tax-free. And if you are married and file together, that's up to 50 grand. That's not some loophole, that's the law. And it's run until 2028. So yeah, it's real. And it's a big deal, right? Why this change matters? Of course it matters, right? Because our tips are our survival money. It also means rent money. It means grocery money. The finally take a day off money. Before this, every dollar in tip was taxable. You could grind to double shifts all year and the government still wanted their slice. Now, for the first time, they're letting working people actually keep a meaningful chunk of what they earn, up to 25 grand if you are single, and up to 50 grand if you are married and file together. But that's not small change, that's life-changing for a lot of people. So tell me in the comments, I tipped 25, 50%, or pretty much all your income. If you want to see how big this law hit for you, I want to know, drop in the comment 25 or 50%, or choose your number. So let's do some strip down of this information about this new law. So the law say the deduction lasts from 2025 through only 2028 for now. So do take advantage of that, right? You only have half of a 25, 26, 27, 28, so about 3.5 years to take advantage of this. So you can deduct up to 25 grand in tips from your taxable income. And of course, married joining filing, you can deduct up to 50 grand. So it's for a job where tip is normal, like in restaurants, bars, salons, share ride, delivery, so that kind of work. The IRS is going to put out an official list of qualifying jobs by October 2025. So do subscribe to our channel where we give you all the tips and updates on this bill especially, so you can see when it's officially tax change and anything that you need to pay attention to. So do subscribe, hit that button. You still have to report your tips. So they will still be on your W-2 or your 1099, or you reported them yourself on 4137. So you cannot just hide them. But once you report them, then you can put the deduction up to the amount I gave you earlier to wipe them out. So there's one catch. So if your income is over 150K for single or 300K for joint, the deduction start to phase out. So it's mainly aimed at working people, not high earner, for this tax break, right? And if you are married, you gotta file jointly to take it. But like say, if you want to file marriage filing separately, it's not gonna work, right? So who qualifies for this law? So this law is basically written for a service worker, like server, bartender, barista, nail techs, stylist, driver, delivery people. So if tips are a normal part of your pay, you are it. So the government is saying, we see you and we're letting you keep more of the money that you already earn. So you got a friend waiting table or driving Uber, share this video with them right now so they don't miss it, so they don't get hit this time on the tax bill. Usually if you use like a tax pro to file your tax, and then they probably gonna ask you this or to help you take advantage of that. But especially if they don't ask, or like you just give them what you usually give, then at least if you follow my channel, you will know there is the tax benefit. So you can tell your tax pro, especially when you file by yourself, like you use TOB3 or some kind of online tax software, then by following my channel that there's the benefit and the changes that you can take advantage starting for these few years, like from 2025 to 2028. So let's run some number to give you some example. So just say you are single and you make 30K in wages and 20K in tip. So normally you would get taxed on the full 50K, right? So with the new law, so that the 20K in tips, it come right off the top, which means you get to deduct it, right? You get deduct the 20K in tip. This is below the maximum amount. So the maximum amount is 25K, but you only have 20K in tips, so you get to deduct all your 20K. So now you have 30K in income. And then you take your standard deduction for 2025. That is $15,750 for a single. So now you only tax on the remaining 14K balance, right? So that's the difference between paying $1,000 in taxes and maybe paying nothing. So let's look at if you are married, the saving could be bigger. So a couple can write out up to 50K in tips plus the $31,500 standard deduction. So that over 80K shield from federal income tax. Let that sink in. That's a huge amount. If you want me to do a follow-up walkthrough, different real-life example like bartender versus driver or salon pro, hit the like button and put in the comment, tell me what to make in the next video. Now let's talk strategy, because you don't just want to save money, you want to make it work for you. You want to fast track your tips. So the government is going to expect a clean record. So use an app, use a spreadsheet, or use a tip tracker. You can find a lot of templates on my Etsy shop at Pro Deductions. So you can use as a plug and play option and don't rely on your memory. The second tip is to pair it with another new deduction. There's another one is the overtime pay. Also is a new tax break. It's up to $12,500 tax-free for single and $25,000 for a couple. Also, there's a new tax break. The car loan interest for new US built car is also deductible up to $10,000. So you can stack them together, like thinking if you go to Macy's and you have all these coupons, or you go to a grocery store and you have different coupons and manufacturer coupon, all that stuff, and you can stack them up. It's the same concept here. All of the deductions that I have told you so far are all pretty new. It's all come from the big beautiful tax bill. So you can save a big chunk of income. So the more saving, the merrier, right? So let's talk about tax tip number 3. You want to think ahead. So this law ends after 2028 unless they renew it. So you want to treat it as a 4-year window, which is right now you have about 3 and less than a half. So use the extra money to pay off debt, build savings, or throw into a Roth IRA. So that way, the money you save keep working for you long after the tax break sunset. So tip number 4, you want to know your state rules. Some state will follow the federal break, some won't. Say California, New York, Hawaii, they might still tax your tip, so you want to plan for that. If you are not sure about your state, so drop your state in the comments. I will make a separate video breaking down which state are playing ball and which one aren't. Let me give you a concrete example. So Maria is a bartender. She makes $28,000 in wages and $22,000 in tips. So before this law, she paid taxes on $50,000. But after this law, that $22,000 in tip is gone. So she taxed at just about $28,000, and then she can subtract her standard deduction, which is $15,750, and now she only taxes the remaining, which is $12,250. Her tax bill basically disappeared. That $1,000 back in her pocket. So she didn't work more hours, but she get it. She didn't have to take a new job. She just got the benefit of the tax law change and subscribe to my channel, so she know all these new information. So there a couple of warnings for you. So this is for federal income tax. So you still have to pay Social Security and Medicare on the tips. That doesn't change. The IRS is making employer file new reports on tips. So if your number don't match, you expect to receive caution, audit. So that's why, remember, my tip number 1 is to keep clear record. And again, this ends in 2028 unless Congress decides to extend it. So don't assume it's permanent. Do you think Congress will keep this around or yank it back in 2029? Drop your guess in the comment. I give you a bonus hack now. So if you are married, both of you work with tips job, coordinate your reporting to maximize the full $50,000 deduction. Another tip, if you are self-employed in certain service industry that fall under the special IRS rule, you might not qualify. So you want to check before you assume. Always keep a daily log of tips. It's not just about tax. It helps you track your real income and cash flow. Here's the bottom line from 2025 to 2028. If you make your living on tip, the government is finally letting you keep a real chunk of it, up to $25K if you're single, $50K if you're married. That's not just tax saving, it's breathing room. You want to use it wisely, don't just blow it all. You want to pay down debt, build saving, invest, whatever move that move you towards freedom. And if you want the tool to make it easy, I got tip trackers and tax template at Pro Deductions at our SG shop. If you want the deeper dive into all the new 2025 changes, check it out at assetwriteinstitute.com. So let me end this and ask you, what would you do with an extra $5 grand or $10 grand back in your pocket every year? That's the question. Drop your answer below and make sure you hit the subscribe so you don't miss the next breakdown, because this law has a lot more in it than just tip. Hi, I'm Mia, and remember, this is for educational purpose only. It's not taxified. And see you at the next video. Aloha.